Srivastava joins us on the show right now. Ajay, hi, morning. Apple's making now 1 out of 7 iPhones in India. Elon Musk is coming himself. Tesla coming to India, and you're still having Wi-Fi troubles.
And I cannot believe it. I think I cannot believe it. That
Nor
tells
can I.
that tells you. I cannot believe it. I'm so sorry for that. Yes, and you've forgotten the money, right?
Yeah, of course. Yeah.
No,
And
I
the
know. I'm
birthday
sorry.
thereafter.
Well, I think everybody is in a very mood now because I think generally speaking, it's not about equity. It's not about. I think when you feel wealthy, you feel good about life, basically, and I think that's a good that psychologically as well. People are feeling a lot more relieved with their net worth intact and after the COVID. So I think So while we look at fundamental company earning EPS, what we forget is the human psychology. Psychology says that very clearly. When you feel good, you invest. When you feel bad about life, you typically don't want to get into any market investment mode and you want to save for the future. So I think we are in that zone where people are comfortable where they are and therefore willing to carry the investment and also make more investments. So yes, there are fundamental factors, but I think to me the most important is human psychology. We feeling good today, and when we feel good, we want to do things and become more expansive.
So, how are you enjoying this feel-good factor? I mean, are you diversifying from equities? Are you buying real estate? How are you enjoying this feel-good factor?
Well, I think, okay, the feel good factor is coming. First, the money has to come to the bank, right? And the tragedy is there are more stories out there than the money you have. So while you feel good, you also feel frustrated at times. But yes, what we have done is rotated some money out into equities, into debt funds, partly started to move out debt funds, which I think will do well over time. They may get postponed, but certainly will do well over time. Real estate, certainly land is what we have been looking at, not necessarily residential real estate, and land in various hill stations of India where we are seeing demand coming over time, and therefore pricing still very attractive to give a multiple of maybe 5 to 7 times in about 5 years' time. So I think diversification to land in select cities in India could be a very good investment at this point of time and could be a multi-bagger.
Interesting. And apart from weddings, there's also the elections coming up, Ajay. So in light of that, how are you looking at the market positioning? Do you believe that there are certain themes that could perhaps capitalize or benefit from this?
Are you seriously believing anybody looking at elections today? I promise you not. Okay. I think elections is a done deal by and large. Okay, you can argue that whether we'll get 400, 370, 3/4 majority, 2/3, but I don't think anybody is contemplating a change of the government at this point of time, even by far. And therefore, one is looking at beyond the elections to say that will the PSU divestment happen? Because if that divestment happens, that's going to score big on the PSU chart. We have invested a lot in PSUs over time, but now the big ticket will come in terms of the returns that are going to come from the PSU. So I think people are looking forward to saying that will the PSU divestment scheme continue? That's the theme, really speaking, everybody's looking at, and the PSU banks. These two are considered the biggest change that we may contemplate as the new government comes in. They don't need to do anything different. It's work for them. It's not broken. They need to fix it. Their capex is now slowing down. Hopefully that private capex comes on board, which it is seemingly coming on board partly. But I don't think we should change our themes from defense, ultra high consumption for premium products at this point of time, and into the in capital goods sector. The theme PSU company, the theme remains the same. I don't think we should change anything because I doubt this government will change much of what they're doing, except maybe PSU divestment, whichever it happens could be the bonanza.
What happens now? Election is a done deal, then we'll move into budget. The minute you move into budget, that good old topic of LTCG, short-term, long-term, equity getting a differentiation treatment, are we in that conversation again?
The problem of getting old is that since you heard it so many times, you become immune to this chatter. I don't think, if you talk to an average investor, even like me, I don't think that makes so much of difference in terms of whether taxation rate moves a couple of points here or there. I think what makes the big difference to us and investors is the fact that is there strength in the market at this point of time? Are weaker hands still prevailing in the market? And that's where the trigger comes from investors. Let's assume long-term capital gains comes in place, 5% of. There could be a short-term trigger, but that doesn't change the dynamics. You saw what happened with the gilt funds. It didn't change the dynamics of investing. So I think more than this chatter, I think the chatter is going to be what is next new going to this government going to do? will it kind of now rein in the fiscal deficit? Because if they do that, it will be a great policy for the economy. Will they sell the PSUs, redeploy the money? Second theme, will the railways land divestment take place finally and the real estate in this country open up? These three things I think will dictate the market terms. And lastly speaking, whether we are supporting the semiconductor industry, etc., but that's not going to impact the market in the next 3 years. What's going to impact the market is there more money in the hands of people? Because consumers spend, if you ask me, is the Achilles heel of the economy at this point of time. High consumer borrowings, which RBI is trying to control, would restrict consumption if there is not money with the people. So I think the key here now, in our view, is that will the government take steps to give more money to the people and consumer spending revive? Because if consumer spending does not revive, the base of CapEx doesn't move up, and then lots of the assumptions we have won't come into place. So, well, we're hoping consumer income goes up, agriculture income goes up, and people buy more, therefore there is CapEx, and the current theme of the market survives. If that theme gets disturbed, your returns could take a very sharp downswing.
Ajay, before we close today's session, tell us a bit about your Jan portfolio versus April portfolio. You talked about an asset class change, but in terms of specifics, what are the changes you've made? 3 big changes in the last 3 months.
I think one big change is we have gone into a lot of capital market related companies, whether depositories, whether it is the AMCs. I think that's the one big addition to the portfolio that we have done, which we didn't have too much of it. We had some of it. Capital market related companies is a large investment theme that we have. I think the second one that we are still adding up, we added up was aviation portfolio. I think that is getting more and more, and unfortunately not many players in that. So that portfolio remains absolutely robust. And the third large thing which has happened in our system is that the metal story has changed, as we said in the last few months. As the metal prices went up, our capital allocation went up. So from almost less than 10 to 15% of the portfolio, that's about 25-30% in the last months. So I think these three movements, I think, would characterize what has transpired if you look at capital market companies, aviation, and the metal stocks.
All right. Ajay Srivastava, appreciate your time.
Thank you
for joining us.
Thank you very much.
If you like this video, then like, share and subscribe to ET Now.